Here's the stock market analysis. We're going to look at a short-term cycle analysis, the construction of that short-term analysis, and then I'm going to look at intermediate term, looking at the weekly chart. This is going to be very interesting as we look at the market and how we have done this analysis that has told us about the movements that we expected. So we'll take a look at the short term. This is kind of a lesson also. Take a look here as I'll move over to SPY. Now, what I want you to see here is this is of course, a candlestick chart. And on here we have a couple of indicators. This is the slim ribbon right over here. This is the slim ribbon PO, which is the signal indicator for the slim ribbon. The slim ribbon right now is showing you a negative condition, as it actually has basically since here it neutralized for a day and then turned negative again. And now you're getting this big rebound in here. And right now you can see it is still red and likely to turn down. But we're going to take a little deeper look at this analysis. What I want you to see here is that head and shoulders right there that actually signaled the top of the market in the SPY. This again is a daily chart of SPY, and we're going to go through the different steps in here of this analysis. So right now you can see that head and shoulders, and you can see that the momentum is actually negative. Let's take the next step in here and we'll put in our cycle brackets, because these are our guides essentially to the cycles in the market. These brackets are called our drawing tool called cycle brackets, and you can see there's a minor one right in here and a dominant one right here, and each of these is called a harmonic family made up of these minor thirds and the dominant cycle. And what we see is that when we get into the period where they're kind of nesting, there's a decline, and then you come out of the nest and there's an advance. Now you see these 1, 2, 3 cycles right in here. Well, this is how they actually formed, and you can see how that makes a head and shoulders. When this dominant pressure right over here is strong, it prevents this rally right here from making a higher high, and then it creates the head and shoulders. So that's just a little basic lesson in here. And you can see that there are 1, 2, 3 cycles in this big family right here, and 1, 2, 3 right over here, and here only 1 and 2. That is suggestive that you're going to see a failure of this rally at some point, and then moving down one more time. Now, this was a panic low right over here, and that came down and hit some important numbers, as I'll show you. And then you get this very significant rebound in here, and it's moving up into the slim ribbon. Now, often the slim ribbon is support or resistance, and in this case, it got a little through it and came down again, and now getting back up to it right over here. And this rally is likely going to fail and then get one more move to the downside right there. Let's take another look at it as we look at things a little more with a little more depth. And you can see in here those periods of risk. In other words, those periods where this nesting cycle comes in right here, and that you get your bigger declines, like the end of it there and there and there, and that would put you out over here. That means that the people that are buying right over here are likely buying premature. We had talked about a low sometime beginning in mid-March, and that's what this comes out to, sometime here. So after this rally is over, you enter into this period of risk and the next move to the downside. Now let's take one more look in here at a fully developed cycle chart with our analysis and projections, and you can see that right here. So we're looking at the reality of how the big harmonic family right in here traded, as you can see right there, makes a double top. Does this, makes that head and shoulders that we talked about, hits resistance, falls off, has a rally to resistance, a sell zone, falls off, and then this last rally coming back up to the sell zone. Some important numbers as we look at this, and I'll advance it right there. The intermediate charts off the weekly have resistance, as you can see it getting right up here. The top of the minor resistance right there is at about 440. This right over here is at about 437. So you can see it's getting up towards that right now, and then likely to fall off for one more decline. Now, this is actually an important low. It stopped very much on this weekly support right over there and had this rebound. So maybe this period is only a test of that low, and then a significant declining phase that we had talked about for so long will be over with, and then we'll be getting into a period where, well, maybe a lot of the stocks will be getting ready for some pretty significant bounces. So that is a look at the four stages. Let me take you back through there again, looking at just the head and shoulders right there, and our indicators, looking here at the cycle brackets and at how that formation of the head and shoulders came, looking here at those periods of risk and how there's one coming up again, which is likely to test that bottom. And here is the one with the full analysis on there and the projection, which takes you to a test or lower of this low that we made here 2 days ago, sometime out into this second to third week of March is the way that aligns. So let's take a look at the intermediate analysis, and we switch over to the weekly chart right here, and I'm just going to blow this up. And again, we have what are cyclic harmonics on this weekly chart. Let me just bring it right out over here so you could see this a little bit clearer. The bigger patterns that we looked at right over here, and you could see the minor cycles right in here, also minor thirds. It doesn't always have to be minor thirds, but in this case it is. And each of these cycles, 1, 2, 3, 4, all of those in this upward trend. But this one then failed right there. And here I put in those 3 cycles from the daily chart. Here's that last rally that we were looking for that is right in here, and the likelihood of one more move to the downside. This is mid-March to somewhere around the first or second week of April, and it came down 14.4%. We were talking about getting at least to the 23.6%. It got below that. That was the 15% correction line. So the question is, in these next 2-3 weeks, is it going to move down and just take out that low right over there? Or is it going to move down and get to like the 20% bear, that next support levels right over there, which would be around 380. So this low right over here around 410, and then the next low right over here around 380. That's what we think is going to happen. The highest probability. We looked for this decline and it came really well. Note in here the momentum is negative, and despite the fact that you have this big rebound, you are still in a negative condition on the stock market. And we don't know what the news is going to be out of Russia, Ukraine, if they're going to talk, if they're going to need to have a surrender before they're going to talk, or if all of that is just a bunch of garbage and Putin has a big plan to really take over all of Ukraine no matter what. What we believe is that he doesn't want Zelensky to stay in there in power, and I think he's probably asking a lot, and I think this upside move that you see in the market is just very premature and very much at risk of, well, the news turning sour again. Very significant upside rebound in here that you can see, but getting, as I showed you here on the daily chart, into that resistance sell zone, and the likelihood of coming down one more time, and still in this risky period of risk. And then if you look out over here, so I said this is a 1 to 3 month analysis. This is 1 month right over here, one more move to the downside. But the timing of the cycle trough being mid-March to late April, what's the probability of this being the low, the final trough? Well, that's really small. And then this period over here is this period of upside rebound. Will that be a test of the high? Will this rally in here get you way up over here? Many times in bear markets, you get up about between 2/3 and 3/4 of the way up, and then it fails. Some have markets that some indexes get to the highs and some miss. I actually think this one will not do that, but you'll get a false rebound of a lot of these stocks out into May, June time frame out over here, and then the next leg and the big risks, July, September, October. Those are periods of a lot of risk out there again for what might be the next leg to what I think is this bear market. So right now we're looking at this rally in here to fail fairly soon and to get down and test that low there, 410 in the SPY, or potentially getting as low as 380 if this turns out to be a full-fledged downward bear move. I doubt that. I think the highest probability is getting down to that near that low of 410 one more time, and then wrapping up what is the third cycle right in here, aligning with the daily chart that I showed you, and the second of these downward cycles that you see right in here, and that giving you the bottom that we were looking for and the upward move out over here. If you're buying now, again, I'm saying there's a pretty good probability that that is premature and that we're going to see the markets move down again.